price thing?
We could probably mention it. So we're live now, so I'll cut in, but go ahead and start whenever you'd like.
Do you want to do the intro where we're, hey Drew, hey, or should we just go into it?
Now let's just jump right into it.
Okay, you ready? Hi, we're LTC Tree, and thanks for watching our video. Today we're going to talk about long-term care insurance and the companies that are out there, the various choices that you as a consumer have when shopping the market.
And this is
And
going to be kind of just an informal discussion. Derek and I, if you're not familiar, we're both partners at LTC Tree. We're long-term care insurance brokers, and a lot of our clients are searching online for what companies offer this because it's not something everybody's familiar with.
yeah, exactly. And so if you called up your ABC, company that you might buy your car insurance from, they will probably tell you how great their company is and how everybody's terrible. But you really, when you're buying this insurance, you want to look at all the companies practically, and that's what we provide. We're provide independent counsel on which companies will have the best price and the best ratings in your specific state, because it does vary from state to state which long-term care insurance company is going to have the better value.
That's right. I'm down here at our office in Florida, and in the state of Florida, if you were 60 years old, married couple, the order of companies and their prices would be totally different than if you're up there where Derek is in Georgia.
Yeah, exactly. Because each state has to approve these new products at different rates, and we got 50 states, and as you can imagine, they all approve them at various times. So that's why, depending on which state you're in, you want to look at all the companies to figure out which one's going to be best for you and your family. One thing I wanted to talk about today, Drew, is the company. One of the main players in the industry is called Genworth Financial. We heard on a conference call that they're going to be rolling out their new product, which is called Flex 3. We're hearing in the end of June, early July timeframe. And how that affects you as a consumer is every time these companies roll out a new product, it's higher prices. And so there will be a window that they'll give us saying that, hey, you have to get the application turned in by this date to be grandfathered into the lower rate structure.
That's right. And one of the things they provided, I think it was to their shareholders. We were looking at it earlier, and we've been looking at it over the last few weeks, kind of analyzing. They gave some slides, and basically it showed a history of their policies and some projections on the new Flex 3 policy that they're coming out with, on some of the assumptions they're using to price the policies. And the short of it is they're getting much more conservative in their estimates for things, which when an insurance company is more conservative in their actuaries, it means that their prices are higher, everything else being equal. So we are estimating that the rates are going to be on new coverage. So someone who doesn't buy now, if you bought now, you'd be grandfathered into the current rate structure. But if you wait until this new plan hits, somewhere, I mean, it's speculation, but somewhere between 20 and 40% more expensive is my personal thought.
Yeah, and so we'll just have to kind of wait and see what happens. But they do give us a heads up and kind of a preview of what's coming, and we don't have that date yet, as I mentioned. Another company that to keep an eye on is Mass Mutual, because if you've done any type of research, you probably have read some articles where companies have moved to gender-based pricing within the past year, where they're essentially charging women higher rates because women are accounting for about 2/3 of claims. So it's kind of like life insurance, where us men, we pay higher rates because we die earlier on average. So they're moving that same principle to long-term care insurance. And if you're a single female, we've seen rates as high as 50% higher than the old product before they did this big change. Now, there's a couple companies that have yet to do that. Mass Mutual is one of the companies that has not. So we don't know if they are going to, but kind of the rumor has it is they're going to be doing it sometimes in the near future. But again, we don't have a date on that company.
I mean, it seems to me like they're going to, any company that is going to be in this business long term is going to have to keep up with trends like gender-based pricing, not because they even think it's a good idea, but just to keep adverse selection from happening. You know, they're going to explain to people watching what that
I was
means.
going to say it's like you're seeing a lot of articles out there where people are getting these big high rate increases, and who bought years back, but back then they didn't know the actuarials like they do now, and so you actually want your company to be very picky and be very selective on who they let in, because that leads to more stable rates down the road, so you can plan better. Because you know it's kind of like if you have a perfect driving record and they group you into the same driving rate class as a 16-year-old boy or somebody who gets speeding tickets or has DUIs, you know, your rates are going to skyrocket when all those people start, you know, getting in wrecks and getting tickets and, you know, that kind of stuff. So long-term care, you want to be in a very filtered rate class, and that's exactly what they're doing. So going forward, as I mentioned, we anticipate these rates are going to be much more predictable for customers for years to come.
You know, I put up a blog post earlier, and I emailed you about this, Derek, and I'll link to it in the show notes for this. I was comparing AARP's long-term care insurance rates over various generations, and I don't know if you saw the table, but it was kind of interesting to see how they, you know, they've just ratcheted up rates slowly but surely on new business to account for all these actuaries, and it looks like it's going to happen again. So, you know, if somebody's thinking about buying this, even though their rates on a policy they purchased today could go up, they're probably still going to save money, though, in the long run versus going into the higher rate class going forward, don't you think?
Oh, you mean if they waited to the next product?
Right. So, like, the next product theoretically should be more stable rate-wise than a policy that's out now, for example, if it's more expensive. But they'll actually spend less money buying the cheaper rate basis than starting off the higher. I mean, right?
Yeah, especially if they go with a company that's already pulled the trigger on the gender-based pricing, because that was the biggest change that they corrected for. You know, that was 12 months ago, and the products that they're selling these days, most companies already reflect those. So
Yeah, Mass Mutual is one of the big guys that still hasn't done it. So I think you're right. We'll probably be seeing something from them in the near future.
yeah. Well, you know, you're probably, if you're watching this, you're probably on our site, and we have a wealth of information about all these companies, and we'll be happy to get you any information and quotes on the various plans that they have. So if you'd like to learn more, you know, just fill in the form down below, and we'll mail you the information. And again, we're LTC Tree if you're watching just on YouTube. And Drew, you got anything to add?
No, I mean, for our May update, we're just really looking for some big changes to come into this quarter, which is, you know, here in about a month in June 2014, and then into start third quarter. So there's probably going to be a lot more newsworthy stuff to talk about in our future conversations.
Yep. Well, hey, sounds good, Drew. Good to see you.
Yep, take it easy.